money used to be really annoying. It took a long time, there were a lot of forms that you had to fill out, and it was really cumbersome, especially if you were a small business person or an entrepreneur. In the past couple of years, that's really started to change. Things have gotten a little bit more efficient, a little bit quicker. And one of the people who's been behind a lot of this change is sitting right next to me. Rob, thanks for being here.
Thank you. Appreciate you having me.
So one of the things that I really want to talk about today is this idea of democratized lending. It's a phrase that we hear a lot sort of in the lending and fintech space, and I was hoping you could sort of spell it out for us. What does that mean?
So democratized lending, I mean, I think it's creating an environment where you're allowing really everybody to engage in a lending transaction. So no matter the size of the small business, no matter their history or what formalities they have in their business, allowing them to engage in the process and be able to get capital to grow their business.
And what problem are you solving at Kabbage? How are you sort of making the lending space better?
Well, first of all, we're lending. So, most small businesses don't have access to capital. So what has traditionally happened, and by the way, a lot of people blame the global financial crisis, GFC, for taking capital out of small businesses' hands. But reality for the small business, especially the businesses we serve, which are small businesses that have anywhere from $50,000 a year in revenue to a couple of few million dollars a year in revenue, those small businesses never got access to capital. So it was never an opportunity. And the fact of the matter is the banks really did engage because they couldn't make it profitable. They would basically say, look, here's a laundry list of information that you need to provide to us, and it's similar to the list that a company that was doing $50 million a year in revenue would have to provide to them, and the banks and the small businesses were lost.
Right. Kabbage recently entered that kind of vaunted space of the $1 billion valuation startup. Why so much interest?
It was so much interest. So, anytime you have an industry where there's been big incumbent players who really haven't innovated in a long time, and frankly have been put in a position under the regulatory framework of being afraid to innovate, and you combine that with startups who really are getting out there and are aggressive, you create a great opportunity. There's been hyper growth in our market. We've gone from literally putting out $7 million in 2011. We'll put out about $1 billion this year, and we're on a trajectory to do about $3 to $4 billion in lending next year. Those are the kind of metrics I think that folks look for in investing.
Right. Another topic that we hear a lot in financial technology is this idea of alternative data. And I want you to sort of explain what that is and how Kabbage uses that alternative data.
Yeah, so I get a little, the term alternative data, well, the whole space is called alternative finance, and I look forward to the day that nobody uses the word alternative in connection, but this is a totally different topic. It's data that's not traditionally used by a bank in making a lending decision. But by the way, I mean, ultimately, companies like Kabbage are answering the same questions that banks are trying to answer, which are namely, can the business afford to repay the loan? What is their capacity to repay? So how much can you lend them? If they have the cash, do they have the character? Are they willing to repay? So if you give them a loan and they have the ability to repay, will they actually go ahead and make that payment? And then finally, what is the consistency or stability of the business? Is a business that's been around, a business that's been around 9 years is more likely to be around a 10th year than a business that's been around a year will be around for 2 years. And so we look at all the same sort of traditional metrics, but we arrive at those metrics in totally different ways. So we're collecting data from bank accounts, which doesn't sound very sexy or different, but the fact of the matter is we electronically connect into the bank account, and we actually pull down all of the transaction data, and so it allows us to understand that business versus just looking at a statement and looking for an average daily balance on the statement, which is not very interesting. We're pulling down social data, shipping data, accounting data, web analytics, processing data, you name it, we will pull it down. Our goal is to get a 360-degree understanding of that small business and do it in a way that it's not intrusive to the business, when they apply for a loan.
And this is an alternative to, say, the traditional credit score or sort of credit rating that most countries sort of in the West have.
Yeah, so I mean, most small businesses have traditionally been scored based on the personal credit score of the small business owner, which is a really shitty way of trying to understand whether a small business is able to repay its debts. It's only one factor, and really the underlying data in that credit score is more informative than the score itself. But banks have had to rely on that because it's a single point of data that allows them to make a decision. And by the way, it's a single point of data that their regulators understand, and so they feel sort of trapped in that sort of cycle.
Right. And what about the issue, though, of transparency? Like, let's say I'm a consumer, or let's say I'm a small business owner, and I don't get a loan from Kabbage, but I want to know what went wrong.
Right.
How can I fix my, I guess, alternative credit score?
So we actually have reason codes. We go through the process. If we deny somebody, we actually comply with the rules that say that you have to provide a reason for the declination of the loan. And so we go through the process and we provide that information. We tie, our scores, and a lot of our models are based on machine learning, and they're not naturally lent, to a specific set of reasons, but we've actually gone ahead and done the work to figure that out. So we can say, hey, look, we haven't been able to see, and we go into those buckets, capacity, or we've seen delinquency in your history, or we, don't see enough time in business, or the business hasn't gotten robust enough. But we try to really break it down to reasons that they understand.
Right.
And we also try to make sure that we say, look, you don't qualify today, but we're going to keep pulling data on your business, and it may be that you qualify tomorrow, which is also an important thing that banks don't do.
Right. I think that there are dozens of countries represented in this room right now, a lot of entrepreneurs, especially interested in fintech, who would want to know, how do you start a fintech business and move it beyond your own borders? And I know that Kabbage has been working on that recently. Could you talk to us about your experience growing internationally? I know when we talked before, you mentioned that first foray into the UK.
Yeah, we caught up on that. We're a technology company, so what we do is, we can operate, we believe, anywhere remotely. But when you're talking about financial services, you've got regulatory and local market expertise that's really helpful. So we launched in the UK in February 2012, and it worked fine, but not great. And then there was a lot of things that were happening on the regulatory side, which made us say, look, let's not invest a ton of time right now into the UK. And so Santander has recently invested in the company, and we're working with Santander to launch in the UK. So we're excited about doing that in partnership with a great name and a great bank and a great set of people.
That's interesting. And teaming up with a legacy institution, what piece of advice would you give to the entrepreneur who's about to do that? What should they watch out for, and what's the opportunity as well?
I think there's a lot of head fakes. So I think in this situation, what happens is there's a lot of people who are very interested in it, and you can spend a lot of time trying to work with the bank in these locations and not get anywhere. We've had thousands of conversations, seems like, with large banks, but you really know whether they're truly invested in launching in the market, and really it's getting buy-in at the upper levels of the organization. So we spent time with all the top folks at all the banks we work. We work with ING in other parts of Europe. We work with Scotiabank in Canada, and we're working with Santander in Latin America as well. So working with them, but working with both the local bank at a high level and working with headquarters at a very high level as well.
There's a feature today in the New York Times about Bitcoin and how it's sort of fallen, out of interest in a lot of corners, but has slowly but surely sort of built in infrastructure and is slowly sort of coming back onto the scene. Could Bitcoin pose any opportunities or challenges to Kabbage or other lending?
Well, other than for lending, where I see Bitcoin, and really I think about the distributed ledger, and it seems like every third word as I walk around the summit is blockchain. Seems to be the topic on most people's minds. I think I think those technologies are absolutely going to disrupt banks. And I think most of the folks here know that it's attacking really sort of the treasury functions. I call them the classic treasury functions in banks. And I think that's where the opportunity is in terms of whether it hits the lending atmosphere. It's maybe another point of disbursement or repayment for us, but it's obviously another currency that we need to manage the risk on. So the biggest issue about moving into international markets is currency risk. And so it's another point of risk that we have to look at and try to understand whether there's an opportunity there.
Right. And my understanding is Kabbage now offers white label services as well and has been licensing some of its products. What have you learned from that experience?
The white label was something we've changed the word to platform, because one thing I spent some time was we were going through a couple of the prior rounds and realized that the last thing we want to do is distance ourselves from the customer. And so in every relationship we have, we maintain our brand. So we're working with ING. We're launching in Spain later this month, and Kabbage Platform will be part of that. But what we've really learned is that we need to, for a deal like this to work, a lot of companies in our space are working with large banks right now, but they're doing it in a way of arranging for what I call decline deals, which are non-strategic deals. And if you were in the panel this morning, I talked a little bit about this, but it's basically when the bank says no, we're on deck, which if anybody knows a company on deck, whom we're often compared to, that's like when the bank says no, we're on deck. I don't sort of believe in that model. I don't think ultimately it's strategic for a bank. And so to me, you've got to deeply and technically integrate with a bank, because what you want to do is you want to help them also lend in the process. And one thing we're doing in every one of these transactions is that we are also going to be putting our own capital out alongside of the bank, which is a rare transaction. So I don't think it's ever happened out there where a bank is actually willing to split with the technology partner some portion of the balance sheet, which to me is fantastic because it puts skin in the game for us. And it also allows us not only to grow a licensing and services business for Kabbage, but it also allows us to grow our book and ultimately serve more small businesses, because we're probably going to say yes to more small businesses than the bank is going to say yes to, even in these transactions. So it sort of really expands the pool and expands the amount of capital that's available.
Over the past few years, a number of large banks have sort of complained that startup players, including Kabbage, are lucky in that they don't have to deal with a lot of regulations.
Yep.
Although it seems like there may be sort of regulations looming in the pipeline. What are you waiting for? What do you see coming?
Well, we're trying not to wait. We're very active in D.C. We are engaged in the conversation. I was in D.C. a few weeks ago with a variety of other folks in the industry, meeting with Treasury and meeting with the chairman of the Federal Reserve Board and the Secretary of Commerce, and trying to engage in the conversation because regulation is coming. And by the way, that's fine that it's coming because we comply with all the regulations that would ordinarily apply to us. But I always find it interesting that the large banks say that companies like Kabbage don't play on a level playing field, because we also don't have 25 basis point access to capital, right? So we're paying a lot of money for the money that we lend out. So there's, if you really want to level the playing field, give us access to that kind of capital as well.
We've only got about a minute left, and I just want to ask you, this last question: what is next in the lending space? What should we be looking out for? I think with this horrible term of big data, and I hate using that term, comes the opportunity to really have hyper-personalization, right? So folks know that already. And so, I think Kabbage has done a great job creating a product that is very, very flexible and applicable to a lot of small businesses and consumers, but I think we can do more. And so I think the promise that we need to deliver on is really create what I call fingerprint underwriting, which is no matter where you come from and whatever data sources you add to your Kabbage profile, we should be able to real-time create a product on the fly that makes sense for you. And so that might be an automobile loan that goes for 4 years, 2 months. It has no payments for 7 months and then payments for 12 months, and then we inject more capital because you want to buy a second car. We want to create products that live and breathe with our customers, and so that's the objective for us as we go forward. Right. Well, Rob, thank you so much for being here, and Web Summit, thank you.
Man, it is hot up here.
Thank you.
I'll say that.